Hi guys, welcome to another video from Amateur Investor. Now, I'm gonna run through something a bit different. I haven't seen anyone else do this before, but just a quick disclaimer. I am, as the description or my title says, I am an amateur investor. I am not giving any stock tips or anything like that. Anything that I do here is just for information as a minimum of what I feel you should do to find the right stocks to pick. So, I don't hold any liabilities for any stocks that you might choose to invest in that you pick up from this channel. Diving into it, this is going to be slightly different. I'm going to show you how I do my first hit on a screener, and I'm using Finvis here. I'm just showing you on screen here the items that I've actually picked for my fundamental analysis as a first hit. The descriptive here, I've picked US as the stocks that I'm looking to invest in. I've gone sales growth past 5 years, earnings per share growth this year, sales growth quarter over quarter, and earnings growth past 5 years. I'm doing historical data. I'm not doing future predictions because, well, basically, it's hard to predict the future. I'd rather look at the past and see how much it's grown and go from there. The other part is I've gone return on investment over 5% and gross margin over 10%. So if you see my first video, then I'll give, that should outline the reasons why I've gone for these filters. Now, the next thing that I want to show you is I've created a spreadsheet after the screener here with the filters, and I've gone for um, essentially the great thing with Excel is that you can actually put in the ticker symbol and you can actually insert some data in here. So I've inserted company name here. The sector I've manually put in. I've just a note that some of these ones here, there were a few that had one company in the sector. I chose not to have a look at those companies. The reason why I'll talk about soon. Um, so the price is automated here. The PE is automated here. Now I had to manually input earnings per share past 5 years, sales past 5 years, earnings per share trailing 12 months, and sales trailing 12 months. Now, if anyone knows how I can actually automate that, that would help heaps. Please comment below. Um, Now, what I've done here is I've gone 70% of the minimum of these four values. So happens for T-Mobile, 70% of the minimum is 70% of 3.62, which gives me 2.53. So that's the assumed growth that I am projecting for the next 5 years, 70% of the minimum sales or earnings per share. That gives me, in 5 years' time, the PE ratio based off of this growth here. So the 5-year PE growth from this line versus this line. That's the current PE, that's the 5-year projected PE based on 70% growth of these four factors here. I get for T-Mobile 113% growth. Now, I've gone for check one, which is the earnings per share for the past 12 months has to be higher than the earnings per share for the past 5 years. Similarly, sales for the past 12 months has to be higher than the sales for the past 5 years. So as you can see with T-Mobile, the sales growth for the past 12 years, for the past, sorry, 12 months, is not higher than past 5 years. So for me, that's an indication that there's a slowdown, potential slowdown in sales. So that's a no good. I won't be looking to invest on that further. And the second check is I want the PE in 5 years' time to be less than 25. So if it passes those two checks, then that's an opportunity to invest if I'm happy with the 5 year growth. So going through all of that, I've gone through my screener. This is the analysis that I've done. What I can do is rank from largest to smallest based on 5 year PE growth from 70% minimum growth of these four factors here. I'm repeating myself, but that's the calculation that I've done, and I've checked the PE growth from column L versus column F. So column F is the current PE and column L is the future PE based off of actual previous data. What I come up with is this number here. All right. So I've got my check. Are these two trailing 12 months higher than the past 5 years? Yes, they are. So that's okay. Now, is the PE in 5 years' time less than 25? Yes, it is. So for me, this is a buy. So happens, um, I didn't do this on purpose. It so happens that this is NVIDIA. All right. So the next stock is Supermicro and so on and so forth. So I would need my two checks to pass, the 5 year growth to be high. So that's how I've ranked them. Now I've extracted the top 10 shares. All right, 1 through to 10, top 10 shares. My condition checks have to be okay, and these are the ranks. So that's the future PE in 5 years' time based off of the earnings per share and the sales growth. So the minimum of those, all right? Oh, sorry, it's in these columns and rows here. Now, the next step that I've done is I've gone sum of all of these growth numbers equals to that amount here, and I've proportioned my purchase based off of that. So it's this number here divided by this number, and that's the proportion that I want to buy of NVIDIA because based off of the simple maths, that's going to give me the highest growth and the highest potential return. So I'm assuming that I have 100,000 in cash, and that's the proportion that I'm buying. NVIDIA, as of 9th of February 2025, the buy price that I'm buying at is 129.84. I'm buying 132 shares at that cost. So that's slightly lower because I'm buying full shares. Now, I'm going to go and buy these at the current price and the price there on the 9th of Feb. And I'm going to show you how this performs over time. Each month, I will look to increase or decrease these shares based on off of this analysis. I'll show you graphs of how the portfolio looks like, and I'm developing a graph of how this total sum here grows or declines over time. What I'm also going to do is I'm going to compare this simplistic first step portfolio versus some of the high hedge fund asset portfolio managers like Warren Buffett, Howard Marks, and so on and so forth. So stay tuned for future videos. This is the one that I'm starting off with on the 9th of Feb 2025. So let's see what happens if this basic filter works. Again, this is not a recommendation to buy any of these. This is the first step of a screener, and you need to dive into your own analysis of these companies to see if they're worth investing. This is just a comparison of this basic step that you should do. And in the future, I'll compare this to the likes of Warren Buffett, Howard Marks, Michael Burry, so on and so forth. Thank you for watching. Look forward to seeing you next time. Thanks. Bye.